All right. Good morning, everyone. Thank you for tuning in here. So, you may or may not know this, but I did spend a short amount of time as a quasi professional jazz bass player. So, it inspires me to improvise because that's what jazz musicians do, right? And, I could have always written a book and be like, oh, look at this chart I saw last April and it worked out perfectly. Anyway, just to get to the point here, we're just going to look at some random charts and just see what we can learn, right? Pretty simple. All right, so right here is Coinbase, which is in the news. You can see here that the level that was support turned into resistance. Okay, it's because there's people who bought here who regretted their decision to buy when the price went lower, and they say if it gets back to my price, I'm going to get out break even. So like I always say, you don't need to be a former hedge fund trader or market guru to see this. Look how clear it is. Support here, resistance over here. All right, let's see what else we could see here. Now, if this moves ahead, it's probably going to hit resistance around 262, we're going to call it. This level was resistance here and here and here. Just like there tends to be resistance at former support levels, there tends to be resistance at former resistance levels. This is buyer's remorse manifested in a different way. There's people that bought at the peak that right when they're done buying, the stock falls out of bed and they're like, if it ever gets back up to my price and I can get out at break even, I will. Charts are psychology. That's what we're looking at here. Forget the fact that we're looking at Coinbase. Think about that. We're looking at the psychology of the people that are doing the trading. All right. That's it. That's why when you look at charts of different things, you see the same patterns. And it's because regardless of what it is, the people that are doing the trading experience the same emotions. Look at that right there, right? Here, what was support becomes resistance, which we talked about. So if we get up here, it's going to be a good chance we hit resistance again. Now, sometimes when we get to resistance, we sell off. You can see that, right? Why does this happen? Well, resistance is this large group of sellers, and sometimes they start to worry that they're going to miss out. If you're an institutional trader like I was, and you got 1 million shares of this thing to sell, let's see, it trades about 11 million shares a day. So that's not a really difficult order, but not an easy order either. And you only sell 100,000, you're at 262, and then you see someone else offering shares at 261, and you think like, I really got to get some of the stock off here. I'm going to go down to two, whatever, a point below them, and you get this snowball effect. All right, next up, that was in the news. I saw an interesting thing on Zillow, which could be the old. Yeah, look at that. Big move higher this morning. Now, this is an example of where a chart pattern doesn't work out. This was going to be the old descending triangle pattern here. And usually these are bearish. It shows that as the buyers have hung out at the support, the sellers have gotten more aggressive. Buyers hanging out, sellers getting more aggressive, willing to accept lower prices. It sets the stage for a move lower. But you can still see some of our principles here, like what was resistance over here became support over here. Now, this is because of seller's remorse. There's people who sell, and for months and months, they thought they did a good thing. And then the stock finally rips higher. And they're like, I made a mistake. If it gets back to my price, I'm going to buy my shares back. So seller's remorse can turn what was resistance into support. And here we have another example. Whoops, sorry. What was resistance here becomes support over here. Being then a good trader, a big part of it is knowing where the important price levels are. It's like having your map, because when something gets to an important price level, they tend to break one way or the other. They really don't stay there for too long typically. Like, look at this. So this is important support in Hershey down around 181. And here's an example of seller's remorse manifested in a different way. Seller's remorse here can keep support intact. There are people who sold at the bottom who regret doing so when the stock blasts off. They say, if it gets back to my price, I'm going to buy my shares back. So remorseful sellers placing buy orders can make support stay intact. And we see the opposite thing here now. Instead of sellers undercutting each other, the buyers start to think like, there's other buyers snooping around here. I know the seller is going to go to whoever is willing to pay the highest price. So I better boost the price I'm willing to pay. I was at 181. I'm going to go to 182. Someone else is like, that guy's going to 182. Well, I don't want to miss out. I'm going to go to 183. So forth and so on. You get a bidding war. So now this support has what we call broken. That's trader talk for when something gets below a support level, and it means something. It tells us that the investors and the traders who created the support with their buy orders are gone. They're out of the market. They've finished, or maybe they've completed. But regardless, when you take a lot of demand or buy orders out of the market, guess what? The sellers have to get aggressive. They have to be willing to push the price lower in order to get buyers back in off the sidelines. So this could be the beginning of a new downtrend here for Hershey. All right. Thanks a lot, everyone. Hope that helps. And I'll see